How are we all this morning? Looking forward to a good day, learning a lot more about listed investment companies and listed investment trusts? Yeah? Who's an investor in a listed investment company or trust? Wow, that's really good. Thank you to the ASA for organising this event. And I guess I see some familiar faces around the audience, which is always good because I've been doing these sorts of things for a little while. The last 14 years at ASX, and for my sins, the last 12 months for the Listed Investment Company and Trust Association. But who's new to the ASA? Who's not been to an ASA event before? That's great. I think you're in for a really tremendous day. I think you'll get a good insight, as Judith said, to what they do, particularly on the education front. As you heard, my name's Ian Irvine. I'm with the Listed Investment Companies Association, and I'm very pleased to be your Master of Ceremony through the course of the day today. My job's really easy. All I've got to do is keep 10 listed investment companies and trusts, fund managers who are extremely enthusiastic about their funds, on time. What could be more easy than doing that? You'll have a great day today. You'll hear from 10, as I mentioned, each with a 20-25 minute presentation up here. I'm going to encourage you, because of the size of the room and the numbers that are still trickling in, we won't be able to take questions within the room. Just getting microphones around will be difficult. Keeping on time would be a challenge as well. However, the really good news is each of our presenters here today has a trade stand back out where you would have registered this morning. There's 2 or 3 areas. Coffee and morning tea, lunches and afternoon teas will be served in each of those areas. So I do encourage you to go and see those that are supporting us here today. By and large, we can't do these sorts of sessions without their support, and your support of them will continue for them to come along and support us as they have done. Some of them will be running competitions as if you needed another reason to go there. If there's a competition being drawn on the day, that'll occur a little around either side of afternoon tea a little later on this afternoon. Just a quick look at our agenda to give you a sense of how today will run. We start out with my overview of the sector, and I'm going to give you a little bit of a snapshot of what are listed investment companies and trusts. This is a little bit of a learning from our Brisbane experience last Friday, where some people in the audience said, I need to know a little bit more about the differences between those two structures, so bear with me as I do that. And I'll also paint a picture of what the sector trending is, and the size and the shape and the mix. Then we'll be followed through to morning tea with 3 presentations and a range of presentations between morning tea and lunch. After lunch, Peter Ray from Investment Research, Independent Investment Research, another one of the sponsors of today, will give you a little bit of an idea about how you might be able to start to pull some of these products and funds into your portfolio. Where do they fit? You've probably heard mention over many years about the idea of diversification. Don't have all of your eggs in the one basket when it comes to your investment portfolio. Here are some classic ways to consider diversifying away, perhaps from cash or even Australian equities. Not that anything's bad about that, but people are looking for returns in other areas that may smoothen the profile and the volatility of your portfolio. So Peter will put together some ideas and suggestions that will be there. And the final session after afternoon tea is a panel, a little bit of a deep dive, not into more about the funds, but a little bit about to the psychology of being a fund manager. What do I do that may be of interest to you as an investor? You may want to do this yourself, or you might want to say, look, I'm just happy touring around Australia and the globe. I'll leave that to a professional manager to do. But give some insight as to how they think, the psychology of the way they invest. I do encourage you to take notes through the course of the day. I find that if you write some stuff down, importantly, I'm going to do this. This is an action item that I want to take away from here today to do a little bit more about. You'll also be able to pick up a lot of information from those stands, but make notes would be one of my suggestions. Support those sponsors, go to their stands. The other opportunity you have, which is probably part of the ASA psychology as well, getting together in groups allows you to talk amongst yourselves. So like-minded investors listening perhaps for the first time to a presentation today, talk to the person next to you. Hey, what do you think of that? Get a bit of an insight as to whether you can validate your own opinions. Here's a great opportunity for you to meet like-minded people to do that as we go through the course of the day. So there's lots of opportunities, stands, presentations, and your fellow attendees here today. So without further ado, let me get started. This is my presentation. You'll probably see a number of these disclaimers through the course of the day today. By the end of the afternoon, you'll have disclaimer overload. It really is saying we're not giving you specific investment advice. It is education, information. If you want that sort of advice, please seek it from a licensed professional. There's a lot of words on this slide, but trying to get things condensed to one page, I know this is a bad rule of presenting, but putting listed investment companies on one side and listed investment trusts on the other, what are the similarities? And there's a large number. What are the differences? So I'll just go through this fairly quickly. This is very high level. It is not complete. There is more to consider. However, it may be worthwhile asking the table at the trade stand if you wanted to find out more about your structure as a company or your structure as a listed investment trust. They are all active managers. They seek to outperform a benchmark. So this is not passive investing. You are employing a professional manager or buying into a company where you're an owner who seeks to give you outperformance above a benchmark. With regard to companies, they are listed companies. They give you shares. The trusts are listed trusts. They provide you with units into the investment. Small difference. They are all admitted under the ASX listing rules to the ASX. They adopt the full service of the ASX. They are listed, traded, cleared and settled through the exchange. The liquidity is between you and other investors in what's referred to as the secondary market. You'll see some stats in a moment about the number of IPOs, initial public offerings, that are coming to the market in this space. That's the primary market. Once you've got a primary market offer and you're up and running, the secondary market liquidity is a way for you to trade in and out of your investment should you choose to do so. Secondary market trading, where pricing is set by you, the end investor, dealing with another investor, buy and sell tension. Governance, companies have boards of directors, AGMs and all that goes with that, and many of us would be familiar with that. That's part of the company structure as it is for a listed investment company, extremely similar. On the investment trust side, the governance is undertaken by a responsible entity. The likes of perpetual or equity trustees would be names that immediately spring to mind from my regard. But the responsibilities are similar. The ways in which they're delivered is a little different. They are both subject to the ASX continuous disclosure rules. Any moment that something that's material becomes available to the management or the RE of the companies or trusts, it needs to be disclosed to the market, good, bad or indifferent. These are the important differences, and this is where I encourage you to think through your decisions, whether it's trust or company that interest you more or less. Income is paid from companies as dividends after company tax, if they've made a profit, and those dividends can be franked in your hand. In other words, if you've overpaid the 30%, you can get a refund. If you've underpaid and your top margin rate, for example, you may have to pay more tax. Distributions paid from a unit trust are untaxed in your hands. Doesn't mean you don't have to pay tax, but you work out tax at the time you file your tax return. Same as you would work out how much franking credit you're entitled to get back at the time you file your tax return. The difference between a trust is you have the money. With a company, you're waiting for the money. The access to management, AGMs, but there's a growing number of companies that provide you with a wealth of information day to day. Emails, regular weekly communications. Trusts don't have to hold an AGM, but more increasingly they do in a form, a shareholder or unit holder briefing. You transact through the ASX, and the way, refer back to the second line, closed-end structures, they have a fixed number of units or shares on issue at any time. The way they grow is to come back to their investors and seek your participation in further capital raisings, share purchase plans or security purchase plans, or dividend reinvestment or distribution reinvestment plans. So they do grow, but it's with you, their existing investors, that those things occur. So that's a very brief snapshot. There's a lot more to it, as I said. Happy to have a discussion with you one-on-one should you want to know a little bit more information. That said, talk to the companies and trusts that are on display here today. So how big is our sector? This is at the end of August. I get these numbers from the ASX, but what I can tell you is that it's consistently holding around $42 billion, and you look over the last 4 or 5 years, grown quite significantly. There are now 111 listed investment companies and trusts on the ASX. So that number increased in the month of September by 1, and about $400 million as a result of an IPO. Speaking of which, the IPO trajectory over the last couple of years has been quite significant for listed investment companies and trusts. The light blue on that stacker in 2017 is the calendar year proportion that was raised in a trust structure. Our first presenter this morning is going to talk to you about the largest LIT to be listed on the ASX, and that's Magellan. They contributed to that light blue bar in some quite significant number, about $1.5 billion. So the split last year of $4 billion was roughly 50-50 between company raisings and trusts. This year, it's predominantly $2 billion as companies. That 1.75, you'll hear from Griffin Capital later on today, or in fact this morning, that's them. On 2 weeks ago on Wednesday today, Neuberger Berman raised another 400. That was the 400 I referred to. So already trusts have gone from 175 to 575. So the capital raisings, and there's plenty more out there in the marketplace. This sector has become very focused and favoured by a number of investors over recent periods. One of the reasons is listed investment companies and trusts are no longer just about Australian equities. These two donut representations on the left is as the asset class split looked in December, left-hand side, and as it is in August on the right-hand side. The dark blue is what was typically Australian equity underlyings. In other words, the company invests in other listed companies on the ASX that are Australian companies. The buff or lighter sandy colours is how the global component is growing, and I've mentioned their fixed income. It's just under $1 billion as at the end of August. That too has increased through September. So the range and diversity of asset class these structures provide you has increased quite significantly as well, providing you with that opportunity to continue to diversify your portfolios. Myth busted, not just about Australian equities. Another myth is they will always trade at a discount, and that's probably said by the naysayers who don't like the structure because it's something they don't quite fully understand. What this is showing you, a recent range of listings, is the IPO price, the dark blue, the light blue is the day one closing price, and the grey is where they traded as at the end of, it actually says June, it's actually August last year. So they're trading closer to their issue price, neither above nor below in general in terms of the total sector. The IPOs, because of the way the companies absorb a lot of those upfront costs. So it's not immediately a hit to the bottom line when they come to the market, it's recouped over time. So in summary, before I pass over to one last slide after this, but in summary, the sector growth is continuing, up 77% over 5 years, from 18 billion to 42 billion. Capital raisings over the last year were 4 billion. Year to date, it's now 2.5, with this number of IPOs in the marketplace already before the end of this year. My personal view is it will tick over 4 billion this year as well. The shift in percentage terms is away from Australian equities to other asset classes, fixed income and global equities. In 2017, 70% of the sector was in Australian. It's 72% now, but the value is constant. The growth has all come, as you can see, in global. IPO costs are covered by managers, seeing them traded closer to their net tangible asset values. This is interesting too, and you'll hear from a number of trusts talking today about monthly distributions. You can actually receive a monthly distribution from a couple of the trusts speaking today, as well as companies are actually paying a monthly dividend fully franked. So changing nature again, you're getting it each and every month of the year. And then there's that emerging number of listed investment trusts. So just before I pass over to Stefan from Magellan, I thought I'd address the elephant in the room. Many of us are familiar with what the ALP's proposal is, how they would treat franking credits should they win government. Everyone across this idea? Yeah? Are we happy? No. Thought not. Thought not. If you want to have your voice heard, there's a number of ways you can do it, and you'll hear this as a recurring trend through the course of the day today. The association, the Listed Investment Companies and Trust Association, and the ASA is a member of the Alliance for a Fairer Retirement System. That's a more broader view of what's going to happen in retirement. It's not just about franking, but it's a key component to it, but it also addresses the need for consideration of what the pension's about and other retirement mechanisms. If you want more information, visit that website. The government called the Standing Committee on Economics to review the proposal of what would happen if refundability of franking credits were removed. You can make a submission before the 2nd of November if you choose to do it as an individual. My association, I believe the ASA and the Alliance for a Fairer Retirement System will also be making representations. A number of our members, listed investment companies, some of you may have seen in the paper this morning that AFIC AGM raised this issue as well. There's a lot of work going on this. However, it's the weight of numbers and the strength of the voice that really counts. I encourage you to do that. Petitions, you'll hear a little bit more about the Wilson Asset Management petition that's there on the last line. There's also one from Plato. If you want to have your voice heard, here's an opportunity to go online and submit. I think Wilson now have over 21,000 signatures electronically to that petition. So I'll leave that with you. Again, happy to talk that through a little later on. That's really a little bit of a story about me.